Check, check, 1, 2, Mr. Market Maker, the Dream Maker. Dream Maker. He's a dream maker, this guy. Let's go into details here. What a day today, huh? Okay, let's go. 1 year chart, SPY. Let's look at the trend line we've always been talking about is a rising wedge between the two blue lines, rising up here. Great. It broke below, got back above it, great, bullish, got back above it, bullish, right back below it, right back below it. Let's zoom into it, right back below. Now, what do we have here, guys? We have here a situation in which you have breaking down below the blue line. That blue line is supposed to be your support right here. This candle was supposed to support, but that was a black fill candle. That means that the market is going to pull on back, which it has worked 98% of the times on the SPY. So pulled on here again, back to the blue line. What does it do? It gets rejected there. Now back in here, back down again. Where? To the 50, that 50 moving average, that blue line that you see here. That is the blue line is a 50 moving average. Okay, you get support at the 50 moving average. Great. There's also a dark pool that you see me. It has marked on 403. It has a white line. That white line is also a heavy dark pool as in addition to the 50 moving average. Great. Now let's take a look. What happened here today? We were heading down here, and then all of a sudden it gets picked up slightly at the end of the day. Now, if you ask me, this red line right here is born here, and it shoots up this way, and it is now it was not able to take it was not able to. This thing is glitching. Okay, wow, this is going crazy. Okay, this was not able to take over this line again. It needed to go above it, stay above it, but it actually was not really able to do it. Now we're closing today at 411.59. That is bearish. That is not a good close, dear bulls. This is not a good close for bulls. Now I tell you other things. Now you have here the MACD that crossed back here in April 24th. It crossed here, and since then it has tried to go and cross it on these pushes right here, but it has failed, and it's failing once again. Once again, we're getting a bright red signal on the MACD. Now, that being said, do you see here that the 20 moving average was pointing upwards, and it was looking very nice, and it was looking very bullish right here? You see it? I'm sitting right over the dashed lines. That was great, right? It was. It was going up. Now, I'm gonna get rid of this. The problem with this is that now that same line that you're looking at is kind of flat. And as it is flat, you run the risk that this is gonna go cross. Another thing, you notice how the 200 and the 150, which determine long term, and not long term, we're talking months, these are getting close together again. Now, this is not a good sign either. Yes, you do have the 50 moving average still pointing upwards, but the thing is that we are kind of losing some momentum here. Do you see that green line right there? I've been talking about that green line for a while. We're going to be able to see that green line more in detail when it comes to, we're going to go into /ES, which is the futures of the SPY, and that's going to give you a better clue of what's happening. Now, let's see. Yes, it's got some lines. Yes, noisy for some people, but I will show you why these lines that look crazy over here make sense at the end of the day. But what I want to show you is the fact that on this line, the purple line that was supposed to be a support of this whole upwards rally that we've had, that line broke down below right here. That line broke below in March. In fact, we tried to retake it, but we failed once again. Now we are failing at it. We're trading below that purple line. That's not good. Now the next thing, you start looking at the next uptrend, which is this one right here. The next one uptrend started here in March, and it goes up, and you put a line right through it, and it's perfect, goes up, beautiful up to here. Not so good here. You get the power back, you remount it, it looks bullish again. You're not able to cross over that that green line, you get rejected one more time with a doji candle, and you come down below it once again, 41.53.96. That's what that line is. Now, you try one more time and it gets rejected again. You try one more time and it gets rejected again. You're getting exhaustion. Exhaustion is happening. This is what you see when you are forming a top. I said weeks from now that we are forming a top. I said right here, this market is forming a top. Okay, it's doing it now. It's going slowly. It's going sideways. Now what happens is that it's losing some more strength here. Now we have here, let's take a look around. Let's see if this is true at all. Look, let's look at, let me change some things here, and let's go to different patterns that I have here. So let's go over the one that has the cloud, and then we're gonna over that. Okay, look, that one has the cloud. You see the green cloud here, red cloud, a piece of a red cloud here, a green cloud again, and then you're getting a red cloud again. Now what do we have here? We have the dots of resistance up top. You see the dots of resistance up top. You had the dots of support at the bottom. Look, you had them here since March, right? Everything looks great. Dots of resistance all the way up to here. Look what the change happened. The change happened here in April 20th. And since this day, I said, around this area, I said that this market is looking is in a topping process. It's about to start heading backwards. Now, said people say no, because we're bullish, this is going to go higher, it's going to go higher. Well, let's analyze it before we actually go and party and and start trying to figure out this is we're going higher. But we had a drop here, cloud went red, you get the bullish momentum, because look, that arrow is telling you that we're going to pick back up. We go here on this line that we talked about, and then it regained its bullish process, and it goes back again. Beautiful. This up to this bar looked great. This up to this bar, you can think that, okay, hold on, cancel the bearish mode, because now we're going higher. Why? You have a signal that is telling you that we're going higher. You had the dots of support. Look, 1, 2, 3, 4 dots of support. That's great. What happened? They got taken out again. The cloud is back to red. And we are closing below this line, below that line. You see that line? That line is supposed to support you. This is your support in your life, bulls. This is your support right here. It's been supporting you since March, but it's getting tired of supporting your heavy ass. So then what does it do? It gets under it. And once it gets under it, it's not a good sight, because you notice last time we dropped under, it picked back up. You have to now pick back up really fast and retake that again for you to say that we're going up higher. Now, a few other things. Look, stochastics. You see the stochastics full right here? It looks like it's very close to each other. So by the second that this crosses, you're going to see another pullback. Look at it here. You had a pullback here, and you had a pullback here. Now, stochastics is about to cross. It's getting close to it. Okay? Now, let's go one more indicator that I want to show you. Let's go to, I have different sets here, and we're going to go over this one out right now. Add selected, use set, apply, done. Okay. So when we talk about the market having divergences, and it means that the oscillators, or these things down here, are pointing down and the market is pointing upwards. So we've been kind of like, I'll show you here, look, with this green candle. You see this green candle here and this bigger green candle right here. So you would assume that the bars down below are green, and they're not. This is red and this is red, and it's a shorter bar than the previous one. But this is a green bar and a bigger high on the next day, which does not correlate with the bars that I'm looking at down here. You understand what I mean by having something diverging? And so you're diverging from the awesome oscillator, and the awesome oscillator, the way it works, this is the lip line right here. The red line is the middle of it, right? And so what happens is that when you are trading above the line, you're still kind of in a bullish momentum. Then the minute that you cross below, although they're red, look, the second you close below it, look, it warned you here that we were going lower. It warned you here, similar to what we have right now. So if I zoom in like this, you'll see these bars right here coming down from being green, now coming down. Now I'll show you what we have right now. This is what we have right now. Does it look similar? Let's zoom out a little bit. Does it look similar? Look, it's warning you that we're gonna go down. Look, it went down. Now, and the market went up. And look in here again. Look, big green bar does not correlate with this one. And then now we're getting a green bar with a pullback. That means that the whole thing is diverging. Now, what does it tell me? It tells me that if we end up crossing that line to the downside, like I did here, right here, look at it. Once you get bars underneath that line, what happens? You got a little push here, and then a big pullback, right? Look, it went under, and it pushed against it. That means these bars are going up, and this is going down. That was another divergence. That's telling you the market is about to drop. And it did. Now, look in here. As it turned green, down here, as it turned green, you got a little push, and then look, a big pullback. Why? Because it's still trading below that. The mountains are inverted. The mountains are not up here. The mountains are down here. So where are we? We are at the time of flipping. We are about to flip. Now, can we flip or can we extend longer and take this sideways action for a few more weeks? In my view, we are forming a top and we are about to cross this line and we're going to start heading this right direction. In my view, right? I could always be wrong, but not a recommendation for you to buy or sell anything. It's up to you. It's your money. You're going to decide, but that's my view of what I'm seeing. That's what I do with my money. Now, let's look at one more thing. One more thing. Let's look at use this set, apply. Okay. All right. So a couple more things. I know there's a lot of things to look at right now, but I just want to um, maybe we'll remove the force index and the stochastic so we can get some room here. Let's see. Let's do that. Let's remove the stochastics and let's remove the force index and let's remove the even the MACD we can remove. Okay. All right. So what we have here is we have another here momentum oscillator. That momentum oscillator is now telling you that if, well, zoom out a little bit. I have another one that I wanted to put. It's the change. Let me see if I could add it. A change of motion, but change of motion. I thought I had it saved there, but it's not. Change of motion. Add selecting, apply it, done. Okay, the rate of change. Okay, so it's rate of change or change of motion. And I want to eliminate some of these noise right here. Let's get rid of the RSI and let's get rid of the RSI. And we'll get rid of the volume as well. Get rid of the volume, get rid of the RSI. Apply. Okay. All right. So we're gonna zoom in a little bit. What we have is this. What we have is the rate of change is when it turns. See this red line right here is the middle of it. When we are trading below the rate of change, it tells you that the market is going down. As it is for right now, the market right now is telling us that we are trading below that line, and it's more than likely that we're gonna pull back this way, and it's more than likely that the market is gonna go down. Now, as you can see, the rate of change when it was bright yellow up here, we continued to go up as the market was going upwards. In here, it started losing its momentum. Look, it lost momentum here, it's lost momentum there, and it's correlating with perfectly with what the market is doing, right? So we are below that line. It tells you that you are more at risk that the market is going to go down. Now, that being said, let's go over. Um, let's go over money flow index. The money flow index, you're gonna see I want you to take a look at it. Let's go to the SPY, and we're gonna go to the daily, so it doesn't get so much noise. Okay, so if you were trading today, if you were trading today, and number one, you have 20 below the 40, that tells you that the market is going down. First of all, that there's your first signal. Second signal is that the rate of change is now is coming down below the red line. You see the red line I've been talking about, right? That red line is now up higher because we zoomed in. So that we are trading right below it. As it went from yellow to orange, look, we dropped. This told you that we were about to drop a candle before. And this candle, this warned you that we were going lower. And then on the next one, by the time you get there, you already have it. It's already orange. You got a little, and again it tells you we're going lower. That's the second portion. Third portion, the money flow index in this case you needed to ignore because it was oversold. And majority of the time when it's oversold, you're looking for a bounce. So I have a bunch of lines here. Yes, for some people might be too much noise, but for me, they're lines that are to be respected. This line here, as for example, that line there is born from many other days. If I look at 180 days, and I can show you those lines are born somewhere. There's one that right here. There's one, another one here. So as you start zooming in, and you look at 180 days, you're gonna start seeing, where did my 180 days go? I changed it there, I guess, by mistake. But you'll see how the reason why that line is there, look, from yesterday's bounce point, I had a line there. So I put it there. There's a reason it's there. Another reason is that before this drop happened, I had an uptrending line that had this, and that, and I drew it upwards. I noticed as soon as it crossed that, I also have a cross right here of the 20 and the 40 right there. Red line, the red dash line crossing the green dash line. And it crossed it this way. This confirms the rate of change is telling you that it's going down. The awesome oscillator is telling you that we're going down, and everything else is telling you. Now, you look at the 1 day 5 minutes, and we are going to focus on the daily, what happened on the daily, on every minute basically. Look, if you were here and you don't know if this market is going to keep bleeding, number one, you have this line that is born from somewhere. I know that there's a possible stop right here, which it did. It bounced first right here at the line. It dropped, tried to bounce. What did it hit? The 150 and the trend line that is right here. That trend line is there for a reason. See that? It bounced, 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 failed, failed, failed. Then what do you get? On the next bar, you got dots of resistance. You got a red cloud. You got the 20 and 40 opening. There's your signal. Okay? Now, you look down below. Awesome oscillator is red, right below the line. Is it up the line or above the line or below the line? It's below the line. It's red. Now, next, it bounces. It hits that, gets rejected, comes back down. I know that when it broke that line is my entry. I go in heavier here on this line because I know that that's a line that everybody's looking at. Now, what do? I stay on that trade because I want to see if that line is going to confirm. I enter it. If that goes up and it gets rejected, look, it got rejected there. It got rejected 1, 2, 3, and 4 times. And then you get the sell signal. Boom. Yellow arrow is telling you we're going down lower. How much lower? People ask me. Well, look at the next line. There's a reason that line is there, and I just showed you why it's there. It's not, I didn't make the lines today. So then, what does it do? It bounces once. It bounces twice. It bounces 3 times, and it even gives you a buy. So this is when I told you guys. I said to you guys, watch out for a possible bounce. There's a possible bounce here. Now you look down below. Down below is telling you redder and redder. Okay, goes down lower. Look, tries to bounce one more time. On the next one, you get a change of the awesome oscillator. It changes to green. But your arrow told you 1 bar before that it is likely that you're seeing a change of direction. You saw it here, but it didn't confirm. You need to wait. Pushes back into the red cloud. pushes back into the dots of resistance, and it gets rejected at the dots of resistance. That next arrow tells you that there's no way, we're going lower. Now we go lower. Look, turns back red. Okay, let's scroll down a little bit. Here it tries again. Look, I have another line here that there's a reason. Now it goes up, it gets rejected at the dots again, it gets here down to the line. Now I'm like, okay, possible bounce here again, possible bounce, because I have the the awesome oscillator turning green. I have probably the MACD also trying to turn green. I don't have it here, but um, other things that I look at. So I look at the money flow, I look at the money flow index, and so I was looking for another blue line like this on the money flow index. I was looking for an oversold area on the money flow index, and I I got it. I got it later. So now look around here. I said I think we can get a bounce here. I think we can get on calls here. I think I mentioned something like that. Now let's take a look. If you didn't enter that, that's okay. Look, it went and pushed, right? I think I said around here. I think on this bar, if I'm not mistaken, I said I think we can bounce here. Why am I saying that? Because I'm looking down here. I'm looking at the rate of change. I see the rate of change changing. I see the awesome oscillator trying to recover. I see the channel momentum oscillator trying to change upward. So I'm like, okay, it's possible. Bounce again. It does it. Tricks you. Goes and makes a new low. Shake off some buyers, and then starts finding its bottom. Now, how are we going to catch this bottom? If you are like me and you want to wait for confirmation, you want to wait for for you to step on the gas double or triple than you would have, then you wait. Now, let me tell you something. What is the difference between you entering here with 3 contracts than actually stepping on the gas when you see the this oscillator changing above that red line and actually saying this thing is changing. Now it's going up. Now I'm going to do 20 contracts instead of 3 because now I see a change. And now what are you seeing here? Look, rate of change. Rate of change just crossed your line. There's your buy. There's your buy right here. There is your buy from yellow, from orange to kind of reddish to orange to yellow, and boom, it crosses the yellow line, goes here and confirms. Now that bar confirmed that we're going up higher. That bar tells you that this is the buying opportunity for the upside. Now look, if you stayed on that trade, you would have known that you're in the right trade. And then if you enter earlier, okay, let's just say if you enter every time that you see a green cloud, you would enter here, and if it changes direction, you would exit, right? Then you would try again. You would enter back here again, and then you're not going to exit that because number one, you got in, you saw the cloud, you got in. Great, check. I look down below, check, is green, check, check. Everything is changing, rate of change changing. So I'm like, okay, I'm in this trade. I'm gonna stay on this trade unless you're gonna break me a new low. If you give me a new low, that's why I have an alarm. You see this? Two alerts right there. If those alerts go off, I exit my trade. Now, if you enter there and it goes, tricks you here, try to kick you off. Next line, you get a buy signal. It pushes on. Next red bar, you get a buy signal. Right here is telling you again, we go higher. And then higher we go. Great. Perfect. Now guys, the thing about this is this. It's Friday. Market makers probably trying to burn the 410 puts that are, lurking around. But to be honest, this volume is nonsense. And this volume, for him to be pushing it up like this, it doesn't make any sense. It doesn't make any sense. I'm telling you right now, market goes up simply because it can. It can because it's being bought up. Period. That's it. Now, I had a level here that we had talked about. Let me look in here. 412. 412. I don't have any information on the dark pools as of yet, but what I can see is that we had. Okay. Wow. All right, so here we go. Let me go over some things and we're going to determine what is it that happened. Why is it that we pushed? This is not retail buying, okay, guys? This is not retail buying. This is the market maker positioning himself to make the best that he can when it comes down to paying or not paying, you know, the options. Okay, so let me see. Let's see if this correlates. Okay, I'm gonna start for around. Let's start from around. Let's do. Let's do 12 o'clock. Let's do 12 o'clock. Okay, here's 12 o'clock. Okay, at 12 o'clock, market maker sold 104 million, and then he sold another 124 million. They did it at 12 o'clock and 11:49, and then 12 o'clock. So that was right here. It generated this pullback. Great. Then he sells another 104 million at 12:32. So at 12:32, there's my 12:32. This causes this 104 million more. And then he does another at 14:53. So 14:53. 14:53. Notice how he disappears for a good amount of time. So he goes from this time, he disappears, and he goes all the way to this. And at 1500 hours, let me look. Okay, at 1554, he goes and sells another one. So 1554, where are we? Towards the end of the day, right? Towards the end of the day, 1554 is all the way towards the end of the day that he steps back into the game. Now the market closes. Okay, market closed, and he starts selling. Okay, he's selling at 1603, which is right here. At 1603, which is these bars right here, which you're not gonna see the reaction on the markets anymore because it's closed. But he's selling 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25. 2.5 billion is what he dumped at the end of the day. 2.5 billion. Okay, so he's been holding all this. They've been buying and buying and buying and buying, because they're creating this push in the markets, and so it is likely that we are now into the stopping process, and it's likely that next week is going to start changing direction and stepping on the gas to go to the downside, unless news come around and things like that. But as of right now, that's what I'm looking at. Let's look at the cues. Let's look at the cues. Let's eliminate all this noise, and let's do use set. Okay, eliminate all the noise, and we go with the basics, and now we can look around. Cues, let's look at the cues. Same situation, right? I don't have that many lines in the cues, but as you can see, I did have a line here from the bouncing point that we had yesterday, and it kind of played out. Look, doji, 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 support, support. Back down, doji again, broke below, there's your entry. There is your entry. If you make lines, you will know when to enter. Simple as that. First candle that closes below, second candle confirms, and then down you go. It's almost as simple as that. You should now make a new line right here, because that's an area that it consolidated, and it went and consolidated. Then let's see if it plays out. Look at that line, guys. That line plays out. So if you paid attention, if you make your lines, you're gonna make money. Okay, people tell me, oh, but I enter, but I don't know when to exit. Grab your tools and use them. They're not there for you to just stare at them. Look, let's just do. I think this is good enough right there. You had a trend line that has been blocking every upside. Going up, doesn't let you, up, doesn't let you, up, kind of tried, didn't confirm, one half a candle in, didn't work, gets rejected, back again. I told you, look, if we cross this line, you're going to start seeing a change of direction. Look at it. It's right there. but everybody ignores it, right? If you make this line right here, you know that there's support, and you see a wick and a wick and a wick, and tried to go lower and couldn't confirm it. This candle doesn't let it confirm. It wicks again, inverted hammer, hammer again. It doesn't let it. You see how it stayed above that line. So that line is viable. So I'm not going to erase that line. That line is not going to stay. Now look. Now you're gonna go here and say, I'm gonna enter right here. I'm gonna enter right here if this candle crosses my line and it closes above it. Look, and it did it once, twice with a little hammer, and the third one confirms. If you enter here, you're safe. You're good. You're in a good trade right there. If you're entering before that, you're entering without confirmation. Simple as that. I hope that helps you guys. I hope that helps you, because that needs to be your thinking when it comes down to these things. Look at the SPY, same thing, right? Same thing. You would have made your lines. You would have made a line right here. You would have made a line right there, and then you would have noticed that it's catching on. Now let's look at Apple, for example. Let's look at Apple. Okay. As you can see, I'm not trading Apple, but I would have made a line right here. I would have made a line right through there. That's my bottom. That's when we bounced last. And look how it works. It bounces off. It bounces, 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 breaks below. There's your entry. If you would have looked at yesterday's point of entry, you would have entered right here on this candle. Second candle, first candle breaks below, second candle confirms. Now you enter, you go on puts, you short it, goes down. This candle scares you a little bit, but then we go lower. Then, you would have to, I'd have to go back and see what other lines are, what, actually I'll do it here with you guys. Look, let's see if anything, any of these lines actually go and do anything, right? That'll be interesting. So you guys can learn with me. Look, let's change it to yellow so that we know. So we put a yellow line right there, and let's go to 20 days and see if that line actually correlates with anything, right? Look, bouncing point, magic, isn't it? It's kind of like magic, isn't it? Okay, now abracadabra, pata de cabra. Look, see that? Rejection, rejection, support, support. Okay, does it go further out on 20 days? No, it doesn't. But let's look at 180 days. There's my yellow line, right? Look at that. Would you look at that? Would you please look at that? Please, somebody, please call the police. I mean, I'm telling you, the reason why the lines are there is because they mean something. This is an area of rejection that is now used as a bouncing point. So when I go down here, there is my yellow line. It's bouncing off an area which was once a rejection. Okay? Period. That cannot be more clear than that, guys. I'm sorry. If you don't get it with that, I don't know what else to do. I try. Believe me, I try. I try to be as clear as possible so everybody can understand, everybody can make money. But you guys keep doing the same mistakes and the same, I don't know. We just don't want to learn. We just want to do what we think and what we hope is going to be best because that's how we feel. Nvidia, for the yearly chart, what is it doing? First speck of red right here on the MACD. Nvidia is in a topping process as well. Look, that yellow line is the high. You're gonna look at if you look at the 20 days for example. 20 days for example, you're gonna see that we've been getting rejected at the kind of the same line right here. Kind of the same line. We got rejected here once. We tried it again, rejected again. We tried it again, rejected again. Tried it again, rejected again. Now we're going lower. We're going lower. Is it going to hold? What is your support? Right here, you're looking at it. Red line, 200 moving average. It's being supported right now at the 200 moving average on the 20 days. So if it breaks below that, let's create an alert. I'm creating an alert right now. If it breaks below that, you're going to, where is it going to go? I'm no genius. It's going to go right here. Look, 274 and 82. Why? Because there's a line there that supported here, rejected here, and then supported, rejected here, and here it rejected and supported. So yes, that is a line that you're going to be looking at. So what do? You set up an alarm at 290.84 and you set up an alarm at 280.19. And this is trapped in between those two. If you ask me, the 20 just crossed below and it looks bearish, more bearish than bullish. You need to go break that 200 moving average for you to get bearish on it. Otherwise, it's a no-go. Amazon. Amazon. This is the day of the earnings. It goes up 123. I wonder what that line is, right? We think I made that line when the earnings came? Wrong. I'll show you. Where does that line come from? Let's make it yellow for the heck of it. Teaching purposes only. Yellow line. Let's see. 1 year chart. Yellow line. Yellow, 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 yellow. Yellow line. You see when I make it when I go back in time, it's it puts it up higher. But um, when let me look in. Let's a little bit closer. Let's look a little bit closer. Okay, look at that, guys. Wow, isn't it magic? Support, 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 and resistance. Resistance. Big strong resistance. It breaks below. And it breaks below and it keeps going. Look, try it again. Failed. Yellow line. Back again. Try it again. Try it again. Try it again. Let's go try it again. He tries it again a year later. What does it do? It tries it during the earnings. There it is. Boom. Magic. Wow. My God. How did he know? Well, he draws lines. There it is. I cannot express how important it is to draw your lines. Okay? Google for Mike, my friend Mike. He hasn't been here, but someday he's gonna watch this video. I'm saying hello to Mike. Okay, Mike, what do we have here? Okay, what do we have? Let's draw a line here for the hell of it, right? Let's draw a line for the hell of it. Why? Because it looks like it's trying to extension to the left. Turn it on. Boom. It's trying to form a top, right? It's trying to form a top. And for me, that 116 is a dark pool, and that's it. 116 is important. It was able to cross that. So that was bullish, except for the fact that it's now consolidating into this area. Into 180 days, it's consolidating. Now let's take a look. 1 year, since we extended that line. Look, let's go where we land. Let's see where we land. Let's see where we land. Isn't this important, guys? Yellow line. Wow. Rejection, 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 rejection. Goes back and tries it. Rejection again. And rejection again. Goes back and tries it. You almost had it. You almost had it. You had a candle. The second one supposed to confirm it, and the third one tricked you. Went back lower. Let's try it again. He goes to try it again. Tries it again. 1, 2, rejected. Tries again. It does it on a gap up. It goes up. Beautiful. How long does it last? Not very long. 1, 2, 3, 4, 5, 6, 7 days. A week. Up here. Beautiful. Everybody's buying. 122. Get into Amazon. CNBC is telling you it's going up. It's the best company. You got to do it. You got to buy it. Put your money in. You're going to miss the bottom. And then lower. Lower because it crosses the yellow line once again. Now it goes lower for a very long time. Now where are we now? Yellow line. So do you want to buy at that yellow line? I don't. But if you want, you can. Okay, so Meta, for the Meta lovers. Are there any Meta lovers? I don't know. I don't know if there's any Meta lovers in the group, but I can tell you that for Meta, you have to go back 3 years and you're going to find this white line. And that white line, I believe, is a dark pool. That white line right there, that 245. You also are going to have on Meta, you're going to have the bullish part of Meta is that you had this line right here, this trend line, that it crossed it. And so sometimes you're gonna come back. Not sometimes, you're gonna come back to this line eventually, and you're gonna retest. And when you retest, if you're able to maintain that line, it's gonna find its way higher. If you go below this trend line again, you're gonna see a lot of selling. people are going to start selling. They're not going to like the fact you just broke that trend line. So let's set up an alarm right there, and that will tell us. All right, Tesla. Tesla, because people love Tesla. Let's do it. Tesla. Okay, look at that. The chart is telling you where this is going, but everybody's ignoring it because it's Tesla. It's a great company. It's going up, right? Has to go up, I guess. Okay, let's see. If I grab a regression channel and I started from there and I pointed to the bottom like that, it looks like that. And if I extend it to the right and I change its colors, uh, and I change its colors to yellow, for example. Oh, it does only changes one. It only changes one. Anyways, oh, here. And if I change it to yellow, you're gonna see this, right? So let's see. Let's see if it makes any sense. Maybe charts are stupid, and maybe the regression channels are broken. You go up, you go down, up to the channel, back again, try it again, try the bottom, pierce to the top, pierce to the middle, try the top, pierce to the middle, try the bottom, pierce to the middle, try the top. Where we are not completed with the top, right? It is likely that we complete the top first. My target was this right here, but I guess I'll move it. I move it. This is my target. This was my target. But now my target is going to be a little bit lower, which is going to be right here. So that was my first target, that it could go up here. Now the problem with that is that it's getting a little bit weaker. You see it on the MACD right here. You see it on the, if I put the stochastics as well, but I don't want to go through all that. We could go into detail in another video. If you guys want something specific, I can just go and do one stock and break it down like all the way. But for now, I think for me, it is possible that you are going to fail the middle line and head down. And if he crosses that middle line, if he crosses that, which is around the 145 area, 145-ish, 145, 146, if he crosses that, then you're going to see a bottom of the channel once again. That'll be crazy, right? Isn't it? Yeah, because people are like, no, there's no way. This is never going to go back to $108. We will see. We will see. Okay. If you look at Tesla for the 1 year, if you look at Tesla for the 1 year, it's kind of consolidating, isn't it? Kind of consolidating. It had left a gap here, came down, touched the middle of the channel, came back up, kind of closed that gap already. So the gap is closed exactly where we are right now. Look at where we close. This line, this red line comes from back here all the way across, and look where we're closing. Where are we closing? Right at that line. Right at that line. Well, we tried it, rejected it, and then we closed lower. So for me at least, it looks like it's more bearish than bullish right now. Just right now. Why? Because look, volume increased as we're dropping. Volume increased as we are dropping. Okay? Volume here increased as we were dropping. So you can see that the volume increases when the stock starts heading lower. Okay? 180 days, you are trading below the 150, you are trading below the 200, and so as long as you continue to get rejected there, you can't go and retest the yellow line down here. When are we going to retest it? Well, when you break that 50. You got to break that 50 moving average again. And where are you going to go first? You're going to go park right here at the 160. You will park at 160. Why? Because I have a crystal ball. That's why. The reason why you will park at 160 is because look, major consolidation at 160. Major consolidation at 160. So yes, if we go down lower, it's going to consolidate at 160 before it goes lower. It will think before it goes lower, something has to happen. It has to be like, okay, do we consolidate here and back again, or do we fail at the 160 and come back down? Or maybe do one of these. Come back down, break below the 50, and look what happens when you break below the 50. It's ugly. You don't want to break below the 50. Okay? Look. Right here is the cross. This day. On this day, you cross below the 50 right here. 50-day moving average. You close below it on this bar. Look. One. Second confirms. Third confirms after hours. And the next day, you confirm it real good. Now, you below the 50. What happens? Ugliness happens when you below the 50. Down. Hits the yellow line by a miracle. Comes up. Hits the 50. Gets rejected, comes back up to the 50, and everybody's happy. Now everybody's like, okay, well, we can buy Tesla again. Let's go buy Tesla. So what do? They buy it. Look, you cross the 50, they buy it. There's your buyers. They're happy. They're like, okay, if you're trading above the 50, I'll buy it. But if you're trading below the 50, I'm selling it. And so you're sitting right here, in which it is likely that if you cross below that, you're going to go down lower. How much lower? Go make your lines, you lazy bastard. Okay, now let's talk about the VIX. The VIX. Everybody's ignoring my old friend the VIX. Everybody's ignoring it because it's not fun. It doesn't give you money. It's not exciting. But the problem with the VIX is that it goes into a falling wedge for a while until it breaks out. And when it breaks out, it takes its time. It's not very fast. Look. But what does it do? What does it actually do? It goes to, again, what moving average? The 50 moving average, the famous 50 moving average. Look what it does. It pushes on up to it. It gets rejected. Ooh, party's over. Mark it up higher. Let's go. Then up higher. Brings it back down below. Down below. Down below. Cannot break the 50. And it takes a few days. Look, it took from here, from the breakout, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days it took for it to break the 50 moving average. And when it broke the 50, kind of did a head fake, hit the 150, and then it came back below. But look, let's keep counting. 10, right? 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. And in the 23rd day, boom, it took everything. It took the 50. On the 24th day, it took the 150, and then it took the 200. See it? Okay, beautiful, right? Now, when was this? March, right? Okay, now look. We were at 373 or something. Now we're back again, forming a falling wedge once more. I don't know if you can count, but let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Look at the 12. Retesting the 50. The 50. It failed because we know it fails. We've done it before. Okay, keep counting. Keep counting. Keep counting. This tells you that if anything makes sense, you got about a week, about another week before this thing pops. Let's say a week or two before this thing pops, right? If it pops on the 24th day, then you have a couple more candles to go about right here. So if you are gonna figure out that this line is here at the 519, maybe around 519, 522, around that date, around those dates, we're gonna be reaching that. So if we go and cross this right here, the 50 moving average, the market is going to go down. If you go and cross the 150, the market is going to go down further. If the VIX breaks the 200, you're gonna get a meltdown. As simple as it gets. When this thing pops, and how high is it gonna go? Well, my crystal ball is telling me that somewhere around this area, the 29.91, or this line right here, which can come up to 27.32 or so. But that's going to happen only when we cross the 50 moving average. Okay? Dollar. Oh, the dollar. Everybody says the dollar doesn't correlate anymore. No, not everybody, just David. But David, I got a surprise for you. Today is the first day since 927 that we are able to break the trend line. Woohoo! Look at that. This was my target. I can say I hit it. I can say that I hit my target. This was my target. I scraped through it. And then finally, your dollar is breaking out of this falling wedge. Everybody's ignoring it. I wouldn't ignore this. I would not ignore this because we are now closing above the 50 moving average on the dollar. Now what happens? What happens next is the question. What happens next? What happens next is that when you have a falling wedge that breaks, and on the 3 years you can see it beautifully there. Look at that. It's been pinned right below that, and now it finally poked its head right through. The MACD is going into the green territory. It's almost there. And on this one, I'm gonna mess around and go put a few things here. Let's go look at the. Let's go look at. Let's add. Let's add. Let's add stochastics. Stochastics. Add selected. Apply. Done. Stochastics. Look what happens with the stochastics, guys. Let's go to the 1 year. 1 year stochastics. Uh-oh. It crossed. Stochastics crossed. You see that? Stochastics crossed. Okay. MACD, green as hell. I was going to say a bad word, but I held myself. Dollar, 1 year, 1 day. When did it cross? Right here. But it takes its time. It goes sideways, a bunch of ugly bars. Looks like Chinese lettering. And then everybody's just like, nah, forget the dollar. That doesn't do a thing. Except this is the first time, guys. The first time. I'm telling you. Everybody wants to ignore it. But last time we crossed it, it went up here, it went up here, it went all the way to 105. Last time we crossed the 50. Well, all the way to 105. Then last time we crossed it here, well, I would have to go back further, but once it remounts to 50, it goes. It goes and it stays and it rips through the 50 very strongly. Very, very strongly. So you're gonna have to keep an eye on the dollar, whether you like it or not. Stochastics just crossed. MACD is green. I'm letting you know. Not to be ignored. Let's look at awesome oscillator. Awesome oscillator. Add selected. Apply. Okay. What is this awesome oscillator doing? Okay. So you notice how here, when we were trading above the line, the dollar was going up. And here we flipped and we went down and the dollar went down from there. And we've been trading below that slip for a very long time. Only in this little push it went up higher again. The thing about this is that we're about to change. How do I know? You see this? You see this? We were here, we're here, green, 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 close to the, and then it flipped. And then it gives you that little bar pointing upwards now. And then it goes. Now look. What are we doing here? We are doing green, but it's dying off. A little bit of red, but it's going back to green, but it's dying off. And it's kind of wants to cross. And it wants to cross it because the stochastics is telling us that it's going to cross. I already looked at everything, rate of change, everything, the power swings, the price impulse, everything is telling us that there's a change happening. There's something happening to the dollar, but it's okay because we're in a bull market, right? I guess you're right. Maybe, right? I could be wrong. Anybody could be wrong. Anybody could be right. Now look, back to the SPY to close this conversation. Okay, this line right here, guys. Let's make it yellow since we've been making everything freaking yellow because yellow is gold and we're gonna make some gold. Look, back down, up, up, here's the 50. Here's the 50, gets rejected. Back down, back to the yellow. Go back up, hit the 50, confirms it, goes up, beautiful, bullish momentum, bull market. Here we go. Black fill candle, back to the line. That line is playing. You don't erase that line. Then go back up. Here's the blue line. That is the bottom of the the uptrend that it should be up there, but it's not. It's no longer up there. It's trading below it. Now we go back down. Here everybody got really bearish because we crossed that yellow line. You notice what happened is we hit the 50 and the bull said no 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 no, we're going higher, which is fine because the oscillators are telling you that we're going lower. So the oscillators are saying no, we go lower, and the market is saying no, we go higher. So they're diverging. Then it goes and remounts this channel again. What did it do today? It took it out. It took it out same way that it took it out before, but it had a bounce. If you don't get a bounce right here, you're more than likely going to pull on back again to retest the 50 moving average at the 404.64. If you fail at that level, if you see a candle closing below this blue line, I suggest you get bearish. If you remain bullish, you're going to get burned. I'm only here to tell you what I think. If you think the best way to stay bullish is you stay with your plan and you stick to it until the end, you can do that. You'll probably burn your account. So you go here, 50 moving average, you don't ignore it. The same way I didn't ignore it when it crossed to the upside, I turned bullish. Now I tell you, if we for some reason end up pulling back to that area and we cross below we close below the 50, be prepared for some bearish momentum. Now, how far? Maybe up here, maybe down here to the 200 moving average, which sits at 396.50 so far, right? It can move. It can move as days go by. So I'm thinking that we're gonna get some kind of movement from here until 519. I hope that I'm right. If not, we're gonna get more sideways momentum that is horrendous. But just based on what I'm looking at, based on the dark pools and all these sales that are happening after market hours, and all this drama and the raising the debt limit and all these crazy things, this was postponed, all these other things that are happening, I personally think that I cannot turn bullish right now. I am not full blown bear saying we're gonna get destroyed right now. I cannot be right now either because I am above the 50 moving average and I cannot get bearish unless I'm below that. I am starting to turn more bearish now because I'm seeing the oscillators and all my indicators telling me that this is dying off and this is a bullshit push. I think that it's coming to an end, but I gotta stay vigilant. I cannot step on the gas all the way. That's it for me, guys. Have a great one and good luck in the markets. Market maker be with you.